What is happening, guys and gals? Joe Badger here, your money mentor, where we have deep pockets and short arms, and where I help you with my nearly 40 years of experience with investing, business, and finance, because money never sleeps. Right now, it's all about those index funds. I'm going to explain a little bit about what they actually are, but you basically need to know that they are awesome investments that you can make money with, whether you are just a beginner or an advanced investor. You can start with a little money or a lot. In fact, I have an earlier video that I did that talks about index funds in depth and actually how they began and their founder. And I want you to watch that one as well. But today we're going to go over some choice index funds that can make you some good money. Also, make sure that you stick around to the end because I have a bonus index fund that is in an emerging market that's new, and you're going to be able to get in on the bottom of it. So let's get into it, shall we? On a very basic level, an index fund gives somebody the ability to invest into the stock market when they don't have a lot of money or a lot of knowledge. The stock market is very complex. There are millions of stocks. And so they pick some really good ones that are representative of the whole market, and they create an index out of those. Those then stand for the rest of the market, and if we follow that index up and down, we can follow the market. There are many indexes. The famous ones are the Dow Jones, which has 30 stocks, or the S&P 500, which has 500 stocks, or the NASDAQ, which is heavily weighted toward tech stocks. There are a lot of other indexes out there, but basically, index fund was invented so that if you have a little bit of money and you can invest incrementally over time, let's say monthly, then you can take part of the big and complex entity and powerful entity that is the stock market. It allows a lot of people who otherwise wouldn't be in the stock market to do just that and also reap the same benefits as everybody else. I really like FTXO. That is a banking or financial index fund. This is the First Trust NASDAQ Bank ETF, and it basically follows the NASDAQ US Smart Bank Index. So it's an index fund that's in the financials, and the financials are doing very well right now, and I really want to recommend this one. It has $240 million as far as the size of the index fund, and its 52-week performance is 81%. Very good. It has an expense ratio of 0.60, and it is passively managed. In fact, that is one of the greatest things about all index funds, is that they are passively managed as opposed to actively managed. They don't have an assigned person managing them, which drives the costs up. In effect, you can also say that an index fund in general is a passive source of income. When we look at the top holdings here, we're going to see banks that we recognize. PNC, Wells Fargo, Fifth Third Bank. Overall, these are mid-value stocks. And what I really like a lot is that the sentiment on this fund is very strong, whether it's short-term, mid-term, or long-term. I like that a lot. What you do is you take a portion of your money, whether it's 5% or less, you don't take all of them in any position, and you put it into this index fund or just into this sector, which is financials. In fact, another financial ETF that is an index fund that I'd highly recommend would also be KRE. That is pretty much the runner-up to FTXO. But I think if you're going to be in an index fund and in the financial sector, those are the places you want to be. The next index fund that I want to talk about is VTV, which is the Vanguard Value Indexed Fund. And this one is large value stocks, and it's basically stocks in the US or North America. And it follows a large cap value index. In other words, these are some really great companies that you've heard of, and they're big, and they're stalwarts, and they do very well. And when we look at the top 10 holdings, we're looking at companies like Berkshire Hathaway, JP Morgan, Johnson & Johnson, Procter & Gamble, ExxonMobil, etc. Really good, big companies. It's a pretty big fund at $77.5 billion net assets. And just like FTXO, you're going to get a dividend. So that's great also about these index funds. This 52-week performance is 36%, but it's really been taking off on a growth spurt and a growth trajectory over the last 52 weeks. 10-year performance is 12%, about 12%, and that is really awesome, along with those dividends that you're going to be bringing in as well. So here's another index fund where you can put a part of your money, whether it's 5% or 20% on the max as far as sectors go. Either way, I think this in the long term is really going to be a really good value to get into. When you are investing in index funds, a really great strategy is to do dollar cost averaging. In other words, every month, pick a dollar amount, whether it's $100 or $1,000, and put that much into the index fund. And in that way, you can use the power of compound interest, which Albert Einstein said was the eighth wonder of the world. In other words, you get interest on your initial investment, and you make interest and money on the interest that you currently made, and so on and so forth. And it keeps growing over time. That being said, the next index fund that I think is a really great value is FZIPX, or as I'd like to refer to as FZIPX, Fidelity Zero Extended Market Index Fund, which is small and mid-cap blends. And it's relatively new. It came about in 2018, which means that you can't go back 10 years and track its performance. Because it's so new, they have zero expenses, hence the Z in the ticker symbol, because that stands for zero, Fidelity Zero IPX. And they have a couple of funds where they have no costs because they're relatively new, and they want to encourage people to get involved in these. And if you look at some of the numbers, we have 1-year performance at 64%, very good, and a lifetime of 14%. If we look at the top holdings, we're going to be looking at companies that are very familiar, like American Airlines, Airbnb, Whirlpool, and others as well. If you think that VTV had a very low expense rate at 0.04%, then take a look at this fund, FZIPX, which has zero expenses. I wanted to give you guys a really good bonus index fund, and that is in the form of MJ. MJ is in a very interesting sector. It's in an emerging market. In other words, it's new. So this gives you a good opportunity to get in early on a new industry, and that is cannabis and hemp ecosystems. It follows the Prime Alternative Harvest Index. In other words, it deals with pharmaceuticals, biotech, and life sciences. And in the last 52 weeks, it had a 56% return. It has $1.71 billion in assets and an expense ratio of 0.75%, which is high. And that's because this is new and it is risky. So be careful with this one. And if you're a little too squeamish about risky stocks, then I would say you look into MJ and some of its competitive stocks like Cannabis, CNBS. Watch them on a watch list for 6 months or a year. See how they perform and which one is the leading horse and which one is doing the best, and maybe put some money into that. But if you are a little more gutsy and you can put money to risk and you feel totally comfortable doing that, then put money into MJ and watch it grow in this new industry. I really like these index funds, and I think they can make you some good money. If you combine these with the ideas I gave you in my other video, then I think you have some awesome choices in index funds there. If you like this, then by all means, like the video, subscribe, or comment and let me know what you're thinking. But that's all I got. Now get back to work because money never sleeps. I'll see you soon.